Hello guys, welcome back to another video, and in today's video we are going to take a look at the dollar index as well as the Nasdaq, gold, and the Dow Jones, Euro USD, GBP USD. Basically give you guys an update based off the last conversation that we had, as the price went exactly as I've anticipated here. As you can see here as well, I anticipated that move to the downside, anticipated this double formation to complete on the dollar, on the Nasdaq, and everything else that we have spoken about there as well. Now, if you are new here, hello my good friend, welcome to the channel. Just make sure that you head over to the educational content side, just so that you can understand some of the wording that we are going to be using here today as well. Now, without any further ado, let's jump straight into the information. Now, there's a lot of stuff currently going on in the universe, not just in the States or everywhere else, but also in South Africa. Please believe it or not, my good friends, but the government is planning to meet with scientists over a new COVID variant that is taking place in South Africa. Now, my question is, what happened to COVID-19? Like, what happened to it? Like, because you could never see it, and it was probably just misplaced with something else. Like, yeah, let's just, when someone's got flu, we say it's COVID. Now, the reason why we have to speak about this, obviously, because why it's clear that they say that there is no lockdown in place yet, but this could potentially just be another way in terms of how they want to come out with this story. Now, the funnier thing about this is that while South Africa is busy coming up with a new virus, China is reopening. Well, I started reopening their borders. Well, not their borders, but the economy, because they also, their COVID cases started to increase, and then for some reason it just stopped, and then South Africa's like, yeah, we got the new COVID here now, so you guys just need to go and sort that out there as well. And now we're sitting with the situation that we have at the moment, my good friends. The question is, whatever happened to COVID-19? Like, where did it go? Like, has it ever been here? Because why? Because it's easy to install fear in people, very easy, because people are scared to die. Like, we know that, like, that's a known fact. But without any further ado, let's go straight into the information. So for my South African people, you now know that you have to be careful once again, because there is apparently a new variant coming through as well. Next up, China is busy reopening, and Wall Street are getting very excited because of this. Why? Because China, everything is basically made in China now. Based off what's happening in China, if China can reopen their gates in the economy, that's very good again for the tech sector as well. Now, if you don't understand what that means, is that if you go back to when it was COVID, China was the first country to have found the COVID virus, and then somehow a bat, Zubat, if you've ever played what's Pokemon, Zubat then escapes, like Zubat flew, and it's like, you know what, we're going to just, and then the stock market fell. Okay, now we see something else is going on. Now, if this is true and this actually does happen, we could potentially see a big rally coming through in the stock market as well, but we don't have concrete information on that yet. Now, the news is full of a lot of stuff that's currently taking place. Coinbase just slashed 20% of their workers. We obviously know this. With the high inflation comes the job cuts. Bitcoin has been losing all of the value that you could possibly be thinking about, and Microsoft plans to invest 10 billion in creating an AI, which is not really of relevant today. But today we've got our Jerome Powell, aka J-Man, speaking, basically going to come out. As you guys know by now, this work, Jay just comes out like, you know what, the economy is misunderstood, the economy is doing good, the labor market is not down, I'm not a clown. So he just kind of comes out and he lies about what the current situation is. But I do want to tell you guys what you can expect from the market based off CPI information that's being released tomorrow. And for my gamblers, please make sure, if you do want to trade it, I've made a video on how you trade high impact news before it takes place, so that if you want to get into there as well. But let's go straight into the information. Now, the dollar index went exactly as anticipated. Now, in most cases, this is considered a fake out or a liquidity grab. How does this work in the market? So the market normally prints support. The market would run around that support. The retail traders then comes in and they think, okay, support's going to hold. Let's buy. Let me give you a real life example over here, right? So the market basically printed support there twice. Okay, let me use this because I'm not so the market printed support. As a retail trader, you come in there and you go, you know what, these are support, equal low, good place to buy. So by definition, you expect the market to pull back to that level, and you obviously anticipate to buy. On lower time frames, you could potentially see some rejection bouncing off these levels, as we can see over here. Now, we know the people who call themselves scalpers in the market obviously saw this here and they thought, you know what, this would be a good opportunity to buy. Why? Because based on the candlestick pattern that took you 10 years to read, and that made you think you're an expert, told you that you have to buy because the market is printing a harami, bullies, or graveyard doji, or all of that stuff that FedStick was speaking about at one point, apart from the lollipop strategy that there was just a break of a consolidation phase at the New York Open. But we're not going to speak about that. So what do we have here is we basically have what's called a fake out. Is where basically retail traders, they line up their positions along this line. Excuse me. We basically have retail traders lining up their positions along this line. The market then says, you know what, we're not really going to go there. We're going to dip lower. What happens now? The market now first takes out all of this sell stop losses that's located here, or all the buyers stop losses that's located here, because retail traders buy at support and they sell at resistance, which is the right thing to do. But you need to wait for the market to first create a bullish momentum before you start buying in a seller's market. Now basically the market now went and took all that stop losses there at the bottom. Remember, the market needs liquidity, and the best place that they get liquidity is from your 0.01 and your 500 Rand deposits that you do week over week. Now, next thing, what we can see over here is now we now see the market approaching this level here, which was a support that got broken. Now for a retail trader, this level is now considered resistance. Now you currently have retail traders selling the market over here. Now I can guarantee you again, the market is going to spike higher to grab all of that stop losses, come back potentially, and then start moving higher. Now without all of that nitty-gritty stuff, it's important to understand and look at obviously where the market is going to close today as well. Now we do have CPI data coming through tomorrow, and now I'll give you two probability setups based on what the CPI data looks like. Now I'm not going to explain to you what CPI data is supposed to be, how it works, and all of that stuff, because I've obviously made a lot of videos, and if I do that in this video, it's probably going to take us another couple of hours to go over that as well. Now basically what you want to wait for is if the CPI numbers are coming through higher than anticipated, you can definitely expect the dollar index to continue higher. Now these are the two probability setups. Firstly, the dollar index is currently trading at a previous level of support that is now acting as a level of resistance, right? There's a high possibility that this daily candle is going to close back above that level, because the market is just like that. Now obviously, depending on what we get tomorrow, right, these are the levels that I would potentially be looking at targeting depending on the kind of data. Now, as I always say, that fundamental data drives the long-term momentum of the market, and technicals is basically a tool used to get into the market. Now if we do get a lower reading on the CPI data, then that means we can expect a weaker dollar, as this anticipate investors to expect that the Feds do not hike interest rates, or that there is some signs of a market slowing down. If the inflation comes through hotter than expected, then you can definitely expect the dollar index to rally, as this means that the Fed needs to make more fire in terms of interest rates than what they would have normally liked, because that means their current interest rate hike anticipation is not in line with what the expectations of the market is. Now you can expect this same thing coming here. from the Nasdaq. Now the Nasdaq, basically, if you go onto like a 1 hour time frame, you can see the Nasdaq over here had a gap that it opened up with here, right? Imbalance that it needs to fill for the, you know, you can call it whatever you want to. Now the Nasdaq just completed a gap that it needed to fill. The thing is, now there's a huge question on everyone's minds: is the market going to go up or not? The market firstly printed a W formation. After a W formation, you normally expect a pullback to the neckline. The market also printed a massive impulse. After an impulse, you expect a correction, and the best way to measure this correction is by taking your Fibonacci from the low to the high of the massive impulse. Now, because we have a structural level located at the 0.50%, which is a 50% retracement basically of this massive impulse, we do expect the Nasdaq to slightly continue lower before any continuations to the upside. Now, most of you would probably know this. If the market opens with a gap, you normally expect the market to fill in that gap, and this you could see here the market had fill in that gap. Now, I'm going to tell you guys how this could potentially play out on a lower time frame, because on a higher time frame, I do anticipate, you know, this market to continue lower. Like, I would probably, you know, I'd like to see a deeper pullback. Alternatively, I would again just monitor the price action on this level, but let me not confuse anybody, right? So again, if we get a higher CPI reading, we're going to use this left leg of the W formation, and we're going to use the 0.50% Fibonacci retracement tool. Firstly, if we do get a lower CPI reading, then I do expect the Nasdaq to definitely continue higher. Okay, if and only if we do get a higher CPI reading, then I do expect the Nasdaq to break below this previous level of resistance that would be then acting as support, and then from there, sorry guys, to continue lower as well. Okay, next up we've got Euro USD. The market never completed this correction, but it's okay. We're currently trading at a very strong level of resistance that the market had slightly rejected over here, as you can see, but the market also printed what's known as an overextended W formation, where the market breaks above the left leg. We do expect a slight correction before a continuation to the downside. However, it's important once again that this level is being monitored very carefully. We could also potentially see a pullback to this 0.382 Fibonacci of the Fibonacci taken from the low to the high of the impulse, which is basically more or less in terms of what I would anticipate. I'm not going to go for the next move. So again, guys, all depends on, remember, a lower CPI reading means weaker dollar, a higher CPI readings mean a stronger dollar. If you do get a low CPI reading, then I do anticipate that. If you do get a higher CPI reading, then definitely this market is going to continue this move to the downside. Next up, we've got the Dow Jones. Now, the Dow Jones firstly went as anticipated. We're at the break pullback. The market never hit that level over there as well. However, the market gave us a clear break above this consolidation phase. However, again, very important based off where this current candle closes. We have this massive impulse. We got a correction to the 0.382. The market is currently testing previous level of resistance as support. If we do get a clear daily close above this level, then we can expect the market to continue higher. If we do get a daily close below this level, then we can expect the market to continue lower. Hit this previous level of support that would then be turned resistance. The market would then also print this head and shoulders pattern, which is considered a bearish pattern from a technical perspective, and for the market to continue lower there as well. Next up, we've got gold. Now, gold also, let me just remove this. Gold also hit a nice level that we've spoken about also in the week, and this is basically what we are faced with at the moment. Again, a lower CPI reading would give us a clear break above that, and then definitely a continuation to the upside for gold. Alternatively, a higher CPI reading would see us break below this level, and then definitely see this continuation to the downside there for gold as well. These are all basically us waiting for CPI data to come through tomorrow. Yeah, Paul's gonna come out, he's gonna speak some stuff, and we can obviously take it from there as well. So we had this move as we anticipated as well, that break to that level there, and we can see the market is now currently being pulled back again. If we do get that lower CPI reading, then definitely this move is anticipated to the upside. Look at this, a massive red candle. How many pips was this? Damn, that was nice. Alternatively, a higher CPI reading would see us move back to the downside once again as well. That's basically how I will be looking at trading the market after the CPI data coming through tomorrow there as well. My good friends, that is all from my side. Thank you for your time, and as always, don't forget, cheers for ears.